Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 42 of the Forex market review. Today we're going to look at two pairs trading against the US dollar as well as the Aussie 200. That's the Australian share market. We're going to take a look at that one for the first time. Normally we're looking at the US 30, but today, along with the US dollar pairs, we're going to look at the Aussie 200. Without any ado, let's jump straight to the charts. So firstly, we're starting here on the New Zealand USD on a weekly time frame. What we can see down the bottom here is the first large AO. So we assume this is 3 coming back for wave 4. So on a weekly time frame, if we grab our Fibonacci Retracement tool and go from the highs to the lows, we can see it's pulled back to the minimum 38.2 and it's come back to almost a 50% Fibonacci retracement level, and it's starting to find some weekly resistance off this 200 EMA line. You'll notice that this 200 EMA line is a magenta color now. I had some advice that the blue color I was using previously wasn't looking as well on the recording of this black background. So hopefully this magenta 200 EMA line is a lot clearer. So at the moment we're looking with a bounce off here. It's had its decent pullback. We're probably coming down for wave 5 on the weekly time frame. Dropping down to the daily chart, we can see that it's currently bounced off the 200 EMA on the daily chart and looking at pushing back higher. So if we're starting our wave 5 down on the weekly, this is likely wave 1 up for wave 2. Now wave 2 on the daily chart can come back generally to about 61.8, which matches up with the horizontal DSR zone. But as long as it doesn't break these highs, it still classes wave 2 if it comes anywhere in here. So if you're looking at shorting this one, you'd be looking at shorting somewhere around this mark here, putting your stops up there of about 150 pips and then riding it down. Personally, I think if it breaks a couple daily candles below this 200 EMA line, I think it's going to come off and come all the way down to probably these lows down here. On a 4-hour chart, we currently have some divergence. So we do have our lower low in price with our higher AO. So the AO wasn't as high as we like to see it, but that's still clear divergence. So it's starting to push back higher. Some people might think, well, I'm going to try to ride this up to this DSR zone up here. So if you're thinking of doing that, drop down to the 1-hour chart and we can see a wave cycle happening. So I'll draw those in for you. Currently, we have the start of wave 1 here. Then this is wave 2 pullback. Come back here, and then it started to push back higher for wave 3. And we know this is wave 3 because of this first large AO. So when this large AO comes back below this 0 line, and this is pulled back to a minimum of 38.2, then we know wave 3 is likely ended for the final push back higher for wave 5. So where can we expect that to come? If you're looking at buying this one, I would like to see it come back to the minimum 50%. For myself, 38.2 is the minimum. Bounce off this 1-hour 200 EMA line. So if you can have entry somewhere around here, stop loss of about, probably 70 to maybe 100 pips, and you're riding it up to these levels of here, roughly around 180 to 200 pips. So let's look at the Fibonacci expansion. We would grab it from the lows to the highs and then back down to the lows. So as this steps down, let me draw this into it. So it stepped down to roughly those levels somewhere down there. You would grab your Fibonacci expansion tool, you'd drop it from the lows to the highs back down to the lows, and it'll show you rough exit lines. And as you can see, we're looking at driving up there for a 1 to 2 risk to reward. Looking at the higher time frame, that matches up with this DSR zone. So you can even ride it a little bit higher if you needed to risk a bit more. But that's why you want your risk to reward. So risking around 80 pips to make it 160. So roughly in there, you can make a 1 to 2. And if you're risking down there, you're probably going to have to come up to a higher for 1 for 2. risk to reward. So there's a couple options there. With the current move on a 1 hour chart, look for a pullback for pushback higher, and then you're looking for selling opportunities to come back lower. But you really want to see a couple of daily candle closes below this daily 200 EMA line and maybe this DSR zone before we're going to get confirmation to the further downside. Looking at the USD CAD as well. So this is obviously going the opposite direction. If you're looking at strengthening US dollar, then with the New Zealand coming down, this will be going up because the US dollar is the first pair. We look at this large AO, we look at this pullback, we'll grab our Fibonacci Retracement tool, we'll grab from the start to the finish of wave 3, all of this being wave 3, it's come back below the zero line, it's come back to its minimum 38.2, it's come back to the 50% mark where I like to see it. It may even come back to the 61.8 because it's probably going to want to try to bounce off this 200 EMA line. Just keep an eye on that one, ready for its push back higher. On the daily chart, we can see it's stepping back up, and on the 4 hour chart, we have divergence indicating it's likely to continue its way lower with a higher high in price and a lower AO. We now have 1 up for 2, down for 3. So this is on the 4 hour chart, and on a 1 hour chart we can see probably the same thing, 1 up for 2, down for 3. All this large AO and never come back to zero line, so it's still all part of 3, come back right there. So from this lowest point is where we can consider the end of 3, and we'll grab our Fibonacci Retracement tool. We'll drop those numbers in for you. Probably have a wave 1 here, then push back higher for wave 2, down for 1, up for 2, and we have our wave 3 lower, all the way down here for 3, looking for our push back higher. Probably going to step down and then maybe step back up. So we're going to look roughly those levels up there. Let me just go and remove this one here, so it makes it a lot clearer. Coming back to probably minimum 38.2. I like the 50% mark, which should also match up with this 1 hour 200 EMA line. So if you look at selling opportunities roughly around there, you could look at maybe risking probably 150 pips max, maybe 100 pips, and then how far do you think it will go? Again, grab your Fibonacci Expansion tool, this one, that's the one with the tick. You grab from the highs to the lows and then back up to the highs. Obviously, we don't know where this point is until it's come back up, but let's assume it's there. We'll zoom out to the 4 hour chart and we can see Fibonacci 61.8, 100 and the 127 Fibonacci expansion levels. And this one matches up with this DSR zone. So I definitely would get out before these levels here. So if you're getting in here and looking at risking 100 to 150 pips, you want to make 200 to 300 pips, and you definitely can make your 300 pips before those lows there. So you can make a good 1 to 2 to maybe even 1 to 3 risk to reward on this trade. And this would be a very good trade indeed. And then obviously with that pullback, looking at the weekly time frame, it should come down. You'll be looking at buying it. So just keep an eye on that. We may see some weakness in the short term on the US dollar, but in the long run, we're probably going to see some strength, especially if the Fed increases interest rates in December, which majority are expecting. The final one we're looking at is the Aussie 200. We can see it's been stepping up, stepping up, stepping up. And on a weekly time frame, it's broken down through this 200 EMA line, stuck its nose back up again. We're starting to see some uptrending support line being formed. So we just want to keep an eye on that one. Drop down to a daily time frame. Looks like this could be wave 1 up for 2, coming back for 3, all the way down here. But we just got to keep an eye on this stepping up trend line. So we'll just go and draw those in there. So if you're looking at selling this one, it's probably going to find some support on uptrending trend line. On our 4-hour chart, we have our divergence. We had our higher high in price with our lower AO. Came back just below the zero line there, so that was a clear AO divergence. Dropping down to a 1-hour chart, we have our higher high in price and our lower AO. There's your lower AO, there's your higher high in price. And now it's stepping back down for its push back higher. It's currently bouncing off this 200 EMA line on the 1-hour chart. So where could it go? Well, if we assume this is probably A, B, C, maybe 1, 2, 3, or this is A, B, C, 1, 2, 3. Very hard to determine at this stage, but just taking an educated guess at round about this levels, it should push back. You could probably look at an entry, maybe if it breaks some of these lows down here, put stop losses, about maybe 500 to 800 pips. And looking at risk to reward, we're probably looking at 1700. So you're definitely looking at making 1 to 2 to 1 to 3 risk to reward to this horizontal uptrending line and this DSR zone down here. Grab your Fibonacci expansion tool from the highs to the lows, back to the highs again. We're looking at bouncing around these levels here, and this Fibonacci 161.8 is right on this uptrending line. So I definitely wouldn't probably likely to hold it much below this uptrending line. It may stick its nose through, but just keep an eye on that if you're looking at selling the Aussie 200 on the current market as we are looking at it. So thank you for that. That was week 42 of the Forex market review. We were looking at the Aussie 200 the first time with the Aussie share market. So it looked like at this stage we could see some weakness to the downside. And how long that will last, well, we don't know. It all depends on what happens with the stock market. But technically, it looks like could be some weakness. And the US CAD as well as the New Zealand US dollar, some US dollar weakness at this stage, but in the long run, it's likely to strengthen, especially with the Fed likely to increase the interest rates in December. So if you want to take a short trade on the US dollar, just keep an eye on that because next month we could start to see some momentum back higher. Here at Sane Investment Solutions, we wish you all the best in your success. Take care. Bye-bye.